They are supposed to be here. And if they come now, that they have to get this thing from the beginning. Now, are we recording now? All right. So, what is Elliot wave theory? Elliot wave theory, Elliot wave theory was discovered by a professional named, what's the name? Ralph what Ralph Nelson Elliot. Now, the postulation of his discovery, the postulation of his what? The postulation of his discovery the postulation of his discovery states that the postulation of his discovery states that the forex market or stock exchange moves in what? In waves. Please, we need to listen attentively. So, you are done with your analysis now. You are not done. But are you in any trade now? Because you need to listen attentively to this, so it's very important. Leave trading for now. May we do. I just say yeah, the horse right now. But these are the things that we add to what you've known. It is very, very important. See, if you can know this Elliott wave theory effectively, my God, is there space? See, this Elliott wave theory is one of the elements of technical analysis uh, you can add together whenever you want to make executions in the trade or whenever you want to analyze the trade. You see this Elliott wave theory, if you can know it, it's an explosive explosive device for you to take advantage of the market. So please, now Elliott wave theory was discovered by a professional named Ralph Nelson Elliot. He is the one that discovered that the forex market or the stock exchange moves in a what? In a certain wave. Do you get that now? It moves in a what? In a certain wave. And this wave and this wave mhm, can be predicted. And this wave can be predicted because it moves in a repetitive it moves in a repetitive what? Pattern. It moves in a repetitive what? Pattern. Now, welcome, sir. I think this place is no. Mm-hmm. Mm-hmm. Mm. Well, it's still fine. It's fine. No problem. Yeah. Mm. Yeah. It's fine. All right. So now let's go. Let's start again. Elliot wave theory. Elliot wave theory was discovered by a professional named Ralph Nelson Elliot. You see this name? Boom. Please take note of this name. And it was this man, and it was this man uh that postulated that the forex market moves in a what? Moves in a yes, in a certain way, which we refer to as what? Waves. Now, please take note of that. Waves. Very important. Now, these waves can be what? Can be easily predicted. You can be able to predict this wave because they move in a what? In a repetitive pattern. What do we mean by repetitive pattern? That is, if it has happened before, it is bound to happen again, and it is going to be like that till eternity. It's a what? It's a constant what? Occurrence. Do you get it now? Now, please take note of this thing. It is very, very important. Postulation, postulation, postulation. That is L. Uh, uh, Postulation means a research theory. Do you get it now? Postulation. Yes. Please take note of those things. It is very, very, very important. And this is the foundation of you to understand what Elliot wave theory is all about. Elliot wave theory. This man discovered that the forex market moves in a certain what? In a certain way, which we refer to as what? Waves. And those waves can easily be predicted because they move in a what? In a repetitive pattern. That is in a constant occurrence. It is ongoing and ongoing. But now it is now left to us as a trader to now know what those waves entails. Do you understand? When we know what it entails, that is how we can be able to know that this is a what? A wave occurrence. So we want to learn it now so that when we see it again in the future, we can be able to predict, and it can be like an informed decision on our analysis. So please take note of this. I'm okay. Mhm. Please, it is very, very important. Elliot wave theory was discovered by a professional named Ralph Nelson Elliot. Now, he postulated that the forest market moves in what? In waves, and that is his discovery. And he was able to make this discovery for like 66 to 70 years before he was very affirmative that yes, market moves in wave. See that long streak, 66 years to 70 years of his life. So this postulation was made during the 80s. That would be during the 80s years, or 80s or 90s. Do you get it now? Before he now finally discovered and affirmative that yes, market move in certain waves. But what are those waves? Is now what we need to know. How does the wave move? That will now lead us to what? Fractals. If you say that market move in waves, hmm, now it will now give us the next thing we need to know, which are what? Fractals. So what are fractals? Can I take it off now? That is why, please take note of this word, waves, and take note of repetitive what? Pattern. Take note of repetitive pattern. It is very important. Repetitive pattern. All right. Now, so we are done, right? Mm-hmm. New drawing. Now, waves. Now, we all know how a wave look like real time now. Do you understand? A wave, when a wave happen, how does it look like? Do you get it now? This is how a wave look like. Now, imagine you are seeing this on a trendy manner. If it's trending up or it is trending down, a wave trending up or a wave trending down. If it is to trend up, how will this shape look like? Is that not so? If it is trending down, how will it look like? Now, Elliot wave theory now states that for you to see the market as a wave, it has a what? A calculated scheme. A calculated what? Scheme that you need to know, that you need to understand. That is, each of these waves have their what? Have their scheme, have the way they are formed. That is why we have what? That is why we have um, the combination of this scheme make us to have what? Market structure. Is that not so? Yes, that is fine. But now, this now this now explains further that you can get another wave inside a bigger wave, and it goes on like that. That is, if there is a bigger wave happening, within that bigger wave, another wave is happening. Do you get it now? Which we refer to as what? Fractals. Now, what are fractals? Now, fractals are smaller smaller pieces of a bigger wave. That is a what? That is just a layman understanding of what fractals is. It's a what? Smaller pieces of a bigger wave, comma, having the same repetitive, having the same repetitive what? Pattern. Fractals are smaller pieces of a bigger wave having the what? The same repetitive pattern. What is the repetitive pattern? Repetitive pattern of price action. Is that not so? Repetitive pattern of what? Of price action. Now, in other words, to make it much more explanatory, in other words, fractals are structures that what? They are structures that can be split into parts. That can be split into parts. All right. Now, each of which is similar. Now, don't forget we said fractals can be split into parts. So those parts being splitted, each of those splitted parts have a what? Similar, yes, similar copy of the whole. Similar copy of the whole. Now, professionals often call this self similarity. Now, fractals are smaller pieces of a bigger wave. This is just a layman understanding. Having the same repetitive pattern. Don't forget the same repetitive pattern, which is also with what? Similar copy of the O. Now, of the O means that a bigger wave. Is that not so? Now, if you don't understand this effectively, you should be able to get this to further explain what this means. All this is still talking about fractals. That is, whenever you see a bigger wave of price action, be rest assured that each of those structure being formed have another what? Another fractal inside. Have another smaller structure inside. Are you guys following? Great. Now, please, you need to understand this effectively. Hmm? Okay. What I said earlier on was that if a market is being structured in a certain way, be rest assured that each of those price action within that structure, that is, there's something we call impulsive retracement. Impulsive retracement. Is that not so? Your market structure. Be rest assured that each of those structure has a what? Has a fractal inside in a smaller what? In a smaller pieces. That is in a smaller time frame. Are you guys following? Now, great. Please, you need to understand this effectively. We need to be on the same page. Now that we know our what? Our wave, and we know our fractals, what is now the structure of these waves? Now, Nelson Elliot made us to know that I can take this off now. Nelson Elliot made us to know that your wave move in what we refer to as 5 to 3 wave pattern. Is that not interesting? Now, how is the wave structured? How is the wave structured? Yes, we know that there's something they call Elliot wave theory. Yes, and we know that you can also see it in a smaller pieces too. Great. But how is this wave structured? Now, Elliot made us to understand that Elliot wave moves or is being structured in a 5 to 3 wave what? Wave pattern that occurs constantly. Is this understood? Now, take note of this 5 to 3 wave pattern. Please take note of that. It is very, very important. For you to know the structure of a wave, know that it must have what? 5 to 3 wave what? Wave pattern. All right. Now, in this, you can see that we have what? 5 3 wave pattern. So the let's look at the 5 wave pattern first, then we will now go to the 3 wave pattern. That is, this means that the pattern wave moves in what? In 5, and after the 5, 3. But there's a way this wave is being structured that you need to know as a trader. Now, what does the 5 wave pattern entails? Now, 5 wave pattern. Don't forget, you are trying to know this as a trader to add to your what? To your analysis. You are not using just this alone for your execution or to enter the trade. You are using it as part of your what? Analysis. Don't forget, I give you what? Elements of technical analysis, in which this is part of it. And I was talking about confluences. Is that not so? So this should be an analysis to add to your what? Confluence. Are you getting it now? Now, so what are the 5 wave pattern we have? Now, the 5 wave pattern is the overall impulsive movement. Is the overall impulsive movement of a market structure. Is the overall impulsive movement of a what? God bless you. It is the overall impulsive movement of a market structure. 5 wave pattern. Are we following? Now, what does that imply? It implies that when you see a structure of an impulsive movement in an uptrend scenario like this, boom. Now, this is an overall impulsive movement. But within the fractal of that impulsive movement, there's a what? There is another what? Wave inside, which is what? 5 wave in between. 1, 2, 3, 4, 5. Are you following? So that is why you will now see this as the what, as an overall impulsive, but in a smaller fractal, that is in a fractal, there's a what, there's a 5 wave inside it. Now let's continue. You do you all get this? Great. Now note that the 5 wave pattern is the overall impulsive movement of a market structure. Now, what does the 5 wave comprises of exactly? Now, the 5 wave comprises of a structure like this. Look at the board. When you have a starting point, boom. When you have a starting point of a trendy market, boom. Now, the market moves in waves, right? You call this your impulsive movement, wave 1. Now, for wave 2 to form, it has to be at the end of your what, wave 1, and it must come all the way down to retrace, not going beyond or below the beginning of your wave 1. That is how you can calculate your 5 waves. Now, if wave 2 ends here, it starts the next what, wave to the upside, which we call what, wave 3. Now, when wave 3 forms and it has ended, it does what? It comes down, and you call it your wave 4. Your wave 4 must not go below the what? The beginning of your wave 3. And when wave 4 forms finish, wave 5 what? Emerges. Now, you have your what? 1, wave 1. This is your what? Wave 2. This is your what? Wave 3. This one is your what? Wave 4. This is your what? That is how we come about 5 wave pattern. Now, take note of this. Wave 1, 3, and 5 are the motive of the market structure. Are the motive of the what? Market structure. What does that imply? It implies that whenever you are to have a trendy market to the upside, your wave 1, 3, and 5 moves alongside with the what? With the impulse, that is, with the motive of that trend. Are you following? Now, that is for 1, 3, and 5. But wave 2 and 4 are the correction are the what? Correction of each motive wave. Is that explanatory enough? Wave 2 and 4. This wave 2 is the correction of your wave 1. This wave 4 is the correction of your wave 3. Another word for correction is what? Retracement. When we are talking about market structure. Are we following? Do we understand this now? Now, that is how we come about what? 5 wave pattern. All right. You said okay. If this guy, it is still wave five. Yes, it is still wave five. Yes, it is still wave five. Do you get it now? Yes, it is still wave five. So don't forget there are additions to these things. There are things you need to look out for when it comes to each of these waves. Now that we know this, we've know this, right? We all know this. Now we are now supposed to know that what does wave one entails, what of wave two entails, what does each of these wave entails, to now give us their what, their additions, like things you need to start looking for after you've known this what, this wave formation. That was what led us to my explanation on each of the waves. Where is it here? Now this is it. Now I said, now that we've known that wave, I now said wave one is the what, is the initial market movement to the upside, that is in an uptrend scenario. And that means that investors want to buy the market at a cheap price. Now wave two is now telling you that the original wave one has been seen overvalued. That is, they want to take their profit, and once you take your profit at the end of wave one, there will be a retracement. That is, market will start correcting, but it must not go below the starting point of your wave one. And once wave three emerges, buyers are now back into the market to what, to extend the movement of the market for a longer period of time, because now they are now sure that yes, market wants to what, really trend up. And that is why wave theory is the what, is most times the longest and the strongest wave within your five waves. That is within the motive waves, 1, 3, and 5. We all know our motive waves right now, right? Are you following? So wave one, this is what happened. Wave two, this is what happened. Wave three. Now, 1, 2, 3. I gave 4 and 5 too. Where is it? Okay, this is 1, 2, 3. I thought I gave 4 and 5. No. Now, wave 4. If the previous wave, I mean, in the previous wave, that is wave 3, traders buying take their profit because the market is seeing was overvalued again. And once they take the profit and they see that the market has been, don't forget, wave 3 most of the times is the longest. So you are buying market for a very long period of time. What will happen? There must be a retracement at the end of it. Market cannot keep going up. It's not possible. That will now bring about what? Wave 4. To now correct the what? The wave 3. Then once it finishes its correction, you are expecting that the wave 4 does not go below the what? The starting point of your wave 3. For you to now have what? Wave 5 emerging. So wave 5 is now the point at which most traders drive the market to the what? To the upside. So it can be an extension to give you another higher high. It can be equal. Do you understand? But know that for every structure to form, you are looking out for a what? 5 waves. For every impulsive movement, for every market structure going to the upside, it must give you what? 5 waves. It will definitely form before any other change of structure. Do you now see how you can add this to your analysis? That is, market starts, you were able to catch the starting point of a particular trend. It gave you wave one, it gave you wave two. Once it has given you wave one, wave two, hypothetically, you already know that there's going to be what? Wave three. There is going to be what? Wave four. There's going to be what? Wave five. Don't say that it's going to be longer, but it is most likely that wave three, which is the motive, is longer and stronger. It might not be in wave three, the extension might, it might happen in wave five. It can even happen in wave one. But traditionally, it is on what? Wave three. So don't forget, I do tell you that always see the market based on what? Probability. So don't be affirmative. Don't be so sure, because market behavior changes, and that will be the only thing that will help you not to dictate for the market, but you following the what the market is doing, because we are retail traders. Mhm. Mm. It is predictable. It is predictable. That is, you can be able to predict it based on what? Probability, not predicting it based on assurance. Do you get the you are predicting it based on probability. That is, if a particular scenario works, you say that there is higher probability that there's going to be more of buyers than sellers in this particular what point at which the market is. Then start looking out for what? Buying opportunities. That's why you have stop loss, to take you out when you do what? Yes, are you guys following? Now, the market is to be seen based on probability, not assurance. And this will help you to what? To curtail you what? Seeing the market with full assurance. Because this will help you to know the what? The change of market behavior. And you not be caught up in unaware what? Uncertainties. You know, the market is full of uncertainties. Is that not so? That is, the only way you can be able to rake out from these uncertainties is when you are seeing it based on what? Probabilities. So if this one no happen, be rest assured that the other one will happen. And if you are now going alongside with the one that is happening, glory be to God, and it's going to your analysis, fine. But if it's not going towards the analysis, then that is why you have stop loss, and the stop loss will what? Please, sorry. Pardon me, no. All right, shut it, listen. Go come back. I love to see your face. All right, everyone. So are we following? Yeah, great. Now, Elliot's wave theory, it is very, 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 very important. Now, are we getting it now? Now, we've done what? Our five. Now, we already know our five waves now. Okay, and you have a question. Yeah. Your wave five must not close below exactly. If it closed below wave four, it has changed the structure. But it is very, it is based on what Nelson has postulated. Based on what Nelson has postulated, it is very sure that you are going to get your what? Your five waves. So you have to be able to see. It must definitely give you your five waves for an impulsive movement. Are you getting it now? All right. Mm, mm, mm. For every market structure to be formed, it must give you your impulsive and retracement now. Yes, Abina, for every market structure to be formed, it must give you your impulsive retracement. So those impulsive retracements is what we refer to as what? Wave. So for your first impulsive movement is the motive of that particular overall trend. So it will have to retrace that motive for us to have wave 2. And it continues like that. Wave 3, wave 4, wave 5. Now I want to give you this. Very important. All right. Now, mhm, mhm. Now, there are there are theory now to make sure that this is properly explained and properly effective to our understanding. I want you to take note of this. There are three cardinal rules. So I've been able to come out with a rules now to make sure that this makes it more explanatory and to be like a guideline for you when counting your wave. Are we together? Now, there are three. New drawing. Now, there are three words, three cardinal, there are three cardinal rules of the Elliot wave theory. Now, there are three cardinal rules of the what? Of the Elliot wave theory. Number one rule, wave theory. We all know what our waves are now. So wave theory is our wave theory correction or motive wave.
Correction, correction, correction. Wave three. No, that one is impossible.
So is it our motive wave or correction?
No, no, no. Sorry.
Yeah. So now your wave theory can never, your wave theory can never be the shortest. Your wave theory can never be the shortest impulsive wave. It can never. Are you getting that? Wave theory can what? Take note of this rule when you are trying to discover your wave. Your wave theory can never be the shortest. So in a situation that you are seeing markets going up, you now see a small retracement and market now continues to go up, you are not calling that streak your wave theory, whereas it is still going. So for example, you have wave 1, you have wave 2. Now you now want to have wave 3. Wave 3 is not like this. Exactly. Now look at this. Your wave theory can never be the shortest. Look at this wave 1. Boom. Now look at this wave theory. If this is this wave theory longer than this wave 1, and the rule state that it can never be the shortest. Now because of this guy, this small pullback you are seeing, you are not calling this wave 3, wave 4, wave 5. No. From here to here is your what? God bless you. From this point to this point is your what? Wave. So you will now have another what? Wave 4 before you now have wave 5. Market happens like this most of the times. Your wave theory can never be the shortest impulsive wave. This is your impulse. That is 1, 2. From here to here is what? 3. This one is what? 4. This one is what? 5. Eh? Eh? I call 2. No, 2 is correction. Yes. Yes. So wave 1 is what? impulse, wave 2 correction, wave 3 impulse, wave 4 correction, wave 5 impulse. So your impulse is also seen as your what motive, the motive of the structure. What is the motive of this structure? Up. Are we following? Now, I'm taking this off. Wave- Yes, now. We've already treated that initially now. Wave 1, 3, and 5 is what? Motive. Wave 4 and 2 is what? Correction. And your correction is also referred to as what? Retracement. Do you get it now? Hmm?
Now the question is
Choose.
here, right?
Yeah.
This is wave one.
Uh,
At this point that we have this.
yeah.
What is this called?
It's just a pullback. It's this place. It could just be a small pullback. And market. When you see the market is not just going like this. Market is not just going like this. Market is not just going straight like this. You could just you'll be seeing it now. That is why I said that each of these things is to be seen as a what fractal, because inside of it another what smaller pieces is happening. So this one you are just seeing could be a what, probably a chart pattern, a bullish rectangle, from a bullish rectangle, and it continues. Do you get it now? It could just be a little consolidation. Do you get it now? To continue going up. Do you get it now? You will just assume it that this is your what long streak for wave theory. All right.
In a situation whereby
Uh,
they are expecting a 5 wave,
eh,
and at some point the 5 wave comes like this
mhm.
and break out of the resistance level. What do you
Wave 5 or wave 3.
like when they are expecting wave 5?
It's more, you have to make sure that even though it breaks it must not go below the starting point of the previous wave. Yes. Now his question is this: wave 1, wave 2, wave 3, right? Wave 1, wave 2, wave 3 break to give us a new higher high. Then wave 4. If wave 4 is coming down, it is still okay, but it must not come below this guy. Anything that make it come below this guy, it has broken the structure of an uptrend, because you can only calculate your wave in a what, in a trendy market. Now if it has gone below this guy, it has broken the structure of your uptrend now. So you have to, it must not break below the previous impulsive. Yes, I'm talking about the correction now.
That's the wave three. Below.
Yes. Okay. If it's wipe, yes, it must. Yes, do you get it now? Exactly. Low now.
You can break this line and see
Okay, now let's see it. Wave 1, wave 2, wave 3, wave 4. If wave 5 is to continue, it will go up now. What will allow it to come down? Anything that makes it to come down and break below this guy, structure don't change. And now that is where we now have our correctional wave. That is 3 pattern. Where we get any pullback that cannot, it's not a correct pullback. That, of course, you are very correct. That is, if the pullback does not get in between your 50 to 61.8, which we are also assuming 38.2, you can't call it a what, a correct pullback. Do you get it now? So that is, this one that happens here cannot be captured as a correct pullback, because if you should draw your Fibonacci from here to here, It did not come down in between 50 to 61.8. Even 38.2 say. Oh, but it's pullback. Oh. It is a what? It's a proper. Yes, it's not possible.
Well, my question was, we know that
50 and 61.8, that is the average price you are looking at. But when you get to 38.2, definitely it is still, yes.
someone says that
But that does not mean that if you get to 23.6, it won't react. Because that's another level within your Fibonacci. It will definitely react. But at the end of the day, it's more likely for it to break it and come down to your 50 to 61.8. All right.
I'm here today. And so what I'm saying is, if we know that when you break here, it's validated.
Uh,
What if you now break here, and from here is now break it?
and it
We
goes.
still, we still
Don't
consider
forget, you will have your trend line now as part of the confluence.
Okay, so you have break and
So probably within this place, you have your A, B, C correction and it continues to the upside. Don't worry, we will get there. Because you are using this as a what? As an analysis, not for your execution. You are adding it together with other confluences. So what is the first true? God bless you. Wave 3 can never be the what? That is the first rule. Now, the second rule, please, guys, follow. Wave wave 2 can never wave 2 can never go beyond or below, God bless you, wave 1 starting point. Wave 1 wave 1 starting what point. Is this clear enough?
very clear.
Number 3, please take note of these rules. They are very important. No, it's not below it. It's still wave 2. It must never go below. It could be equal, but it must not go below. That is closing price. It must not close below. That's what you want to say. Are you getting it now? That we could have fake breakouts, and at the end of the day, it will come back. So it must not close below. If it close below it, structure ti bàjẹ́. So now wave. Yes, wave 1 start. That's starting. Don't mind the handwriting. Wave 1 starting point. Now the third rule, wave 4 wave 4 wave 4 can never wave 4 can never cross wave 4 can never cross in the same price area of wave 1. Wave 1. Now see this, wave 4 can what? Never cross in the same price area of wave 1. Do we understand? You don't understand? Okay, now you have wave 1, right? Wave 2, wave 3. If wave 4 is to come down, it must not come down to the price area of what? Wave 1. Anything that make it come down to the price area of wave 1, structure the. That is, another word, wave 4 should not close beyond the starting point of wave 3. Anything that make wave 4 to close below the starting point of wave 3, it will come into what? It will come into the price area of wave 1. Wait. Let me give you a new page and explain. Ah, let me give you. Now, you have wave 1, right? Everybody look at the board. 1. You have wave 2. Is that not so? 2. You have wave 3. 3. Now, this is the where is the price area of wave the price area of wave 1? This place, Abi. Now, if wave 4 is to come all the way down, it is expected not to come into the area of what? Of wave 1. Anything that make it to come into this area of wave 1, it is most likely that it breaks below this guy and it will change structure.
That means you are breaking this.
Yes. If it stop in between it and I did not break below this guy, it is still what? Wave 4. So this is wave 2. Wave 2 is your correction. No?
Okay, it will not break below wave 2.
Yes.
No, we have broken beyond the price now.
If that's what I'm saying. If it has broken beyond this guy, it has come into the price area of what? Of wave 1.
But what about when the corrective measure starts from the wave 1?
Wave 1.
You have broken, yes, you have broken
The starting point of your wave.
from year to year. Is that not the price?
The price
Yes,
area.
He has broken. He has gotten to this level now.
It has gotten to it, yes.
But
But now, if it should come inside this area and it break below the starting point, and it break below the starting point of wave 3, it has been validated. You still don't understand? Within this place. Within this place. Another block here. Like no, other block does not work this way. The other block works at this point, not at this point. Whatever make price come here, you are looking at it as a mitigation block, not other block. Breaker, breaker block. Breaker block is when a failed other block comes down and it comes back to retest it. That is breaker block. You understand? That is ICT. Don't worry, but you do understand now. So it's not other block, it's mitigation. You are making the market to come down to mitigate with this to now continue going up. Do you get it now? That's what they call mitigation block. And that was what made me call, one of the things that made me call buy yesterday. Because I knew that the market will come all the way up to come and mitigate. Let me show you. Mitigate means yes. No, to retest. Now, see this. I knew perfectly well that this guy is on a what? On a downtrend. Is that not so? Now, everybody look at the board. I know perfectly well that this market is on a what? Downtrend yesterday. And it got here. Boom. It got here. And it was already here when I called a buy. And it was in a downtrend. Was I supposed to call a buy? No. But I knew that this market was definitely going to buy because it has to come and mitigate with the what? With this guy here. As a what? As a retest. Do you get it now? So that is, you have your what? Lower low, lower high, lower low, lower low up to this point. Now, when it did lower low here, I know that the lower high is what we are trading. That is the retracement. and it is to mitigate with the what, with this guy here, and it is to retrace to this point of this liquidity here. Now, do you see it now? To this point, did market now retrace to that point? Yes, it got there. See, I'm looking at this point. Oh, now market came all the way down and went up, break outside the downtrend to make sure that it definitely comes to mitigate with this. Do we understand what mitigate is now? Eh? To come and retest that. Now, if you should draw your Fibonacci from here to here, it will come to 50% of this guy, of within 50 to 61.8. As at the point of no, it has not broken out. But number one, let's come to 4-hour time frame. Now, this market got to this place, it respected, and it gave a what? A very beautiful bullish signal. When it gave bullish signal, it was at this point I called it. So I called the buy within the price of 3325 and 3320 and stop loss at 3315. But because of market is within a downtrend, it came down. So I had to tell them they should adjust their stop loss, because that stop loss could be easily what? On 10, and it might go back to direction. So they brought down their stop loss to 3305. And I told them to layer at 3315 because I knew definitely that this price will still come out to come and mitigate. And the mitigation of this guy means that market is what? Retesting this what? God bless you. Because when a breakout happened from this M pattern, it has not retested yet. It's still part of it. So do you not understand now? Of course now. Because it has gotten to a zone and it has given a 4-hour candle of a bullish signal. So there's definitely going to be a pullback to retest before and which happened over the night. It came down now. Now it came down, but did not go all the way down to give us our new lower low. And now it becomes a what? A potential W pattern. Oh yes, initially to call a buy to this point. Do you see that? You even see that our final TP is at where? 33. God bless you. Why didn't I take it beyond 34? Because I know that there's definitely going to be a reaction at that point. So it's better we get out from that place finally and wait for the next movement. And market got to 340. Yes. It's got there. It got there now. Actually, not be say it get there like that, but at least it was close to it. But I told you, they stop looking at the market. It still get there. It got to. It went beyond TP2, but it's not way. But it was very close to TP. It still get there. Always see the market as what? Zones, not levels. Uh-huh. You would have break even now, or you'd have taken partials now. Is that not part of the things I taught you? And if it comes down like now, I actually left a buy yesterday with 0.05. I wanted it to go. I was even thinking it would go beyond to this point, but I knew that it might not because of this guy. So what did I do? I break even. I woke up over the night to see that my break even it hit it because of this sale that happened, and it took me out in what? In little profit. I thought you guys break even now. Above my entry point, sir. So when the market got to this point and it has not hit my TP, it was already giving me like $50 to $60, and I break even above it. It now came back down. It now took me out in $12. Do you understand now? Uh-huh. Yes, now. But I've made profits. I've taken profits yesterday already. I just left that one that Coco Macheri Lontier. You understand? May just they play in your own. And if you want go, go. If you don't want go, you go. Take me out in small profit. Okay. Do you get it now? Exactly. So now, Eh? Yes, he tested it now. No, I still don't get. Now, look, if you look at this end pattern, you will see that the length of the end pattern has completed. The length of the end pattern. No, yes, now. What made me call by is because the length of the end pattern has completed. And it has completed for a what? A perfect zone. And it has given a what? A chart pattern again. I don't know if you get my point. Those are the confluences you are looking at now. From this point, right? What am I drawing? Where's the delete? To the neckline. Now, from the neckline, where's the neckline? Yeah, to this point. No, this is not the starting point of it. Do you see it now? It has completed and it has printed to a what? To a point of interest that could change the bias of a what? Which happened with what candlestick pattern? A bullish pin bar. Do you get it now? And what happened after the bullish pin bar? Markets went up. Now it came back down to retest this and gave us another bullish. I'm still expecting this market to what? Go all the way up. But what will validate this is if it breaks the what? The neckline. You can say I've put a hash as the neckline. If it breaks above this guy, it's going the same length of this guy up to this liquidity here. Eh? Yes, acting as a bullish engulfing. At the what? As the retest of this breakout of the downtrend. See, breakout, retest. Yes, it has gone into the length of this same pattern now, to this point. Yes. The height of this guy, the height, if you see it, it has even gone beyond itself into this zone. From the neck. Yes, now from the neckline. Yes, this one.
I may consider this as the neckline.
Uh-huh.
But you are placing this one, this.
Okay, you want to consider this as the neckline?
Yes.
Okay, oh yeah, now let's see.
I'm considering this one, not this one.
This
I'll
point.
this place. When you put your rectangular from
Okay.
this place as the length of
Okay.
what you judged.
Okay.
Do you get
Now, look at this. What if we are to draw the height of this guy from this point to this, from this height, Abi, to this?
Yeah.
Are you seeing it now? So now that you've known
This
the
is not
height.
my neckline. This is I'm putting as a neckline. This is what I'm using. Yes.
Okay. Height. Now it has broken below it. Then you will now take it and place it as your neckline. Did market get there? It even went beyond. It's still the same thing. But are you getting it now? But when it goes beyond, it went beyond it because there's a what? There's a point of interest at this point, and we got a what? Yes. Do you get it now? I'm supposed to call a buy here, but we've made profits today already. So, you did not see that sell on GBP USD. My God. Just on that trade, if I know I found knock and better loss side. But I was just able to make 300. It was very painful, just 300. Very painful. If not, yes. And I did not use one lot size. It wasn't one lot size I used. It was 0.5 I used. Imagine 0.5. No, 0.5. Its currency pair is not as volatile as it's not as, it's not as volatile as gold. If 0.5 is giving me that 300, if it is gold, 0.5 will be giving me close to 1,000 with that same movement. So currency pair no dey volatile like no on just one position. Yes, yes, no. The sale was massive. Ah, yes, so we are getting there. Now see this. Once this guy break above, once this green candle break above this guy, we are going up. This will be the movement. Are you guys seeing it? That is if it breaks above it. Oh, God bless you. So you are now looking for the length of this word. I am very certain this guy is going to go up. But I'm done for the day. Now, do you see the height of it? It's getting to analysis is what? So wave 1, wave 2, wave 3, wave 4, wave 5. Are you seeing it now? Wave 1, wave 2, wave 3, wave 4. Now, after wave 4 happens, it tells you that even wave 4 acts as a breakout, there is still going to be a wave 5. Oh. Now, you now waited for wave 5 to happen. Boom. Wave 5 is now closing at equal price with this guy. Wave 1, wave 2, wave 3, wave 4, wave 5. Now, after the wave 5, we are supposed to have a correctional wave. So the A, see what I drew. This one now, A, B, C. Do you understand? Probably then when it gets here, market will now start selling again. But with eh? The ABC could be here. A. You know, this is hypothetical. Not be say I'm not affirmative. I'm just what is likely to happen. So the ABC could be like this. A, B, then C. But maybe C will now come up to this point, giving us from here. Where's my Fibonacci? From here, entirety from here to here. For price to now come in between 50 before we now get another sell to the downside. That is if we now get here and see market sentiment. Oh, you understand? This is still hypothetical. Do you get it now? Overall structure on daily time frame is still uptrend now. Do you see it now? Overall, it is uptrend, and this is daily time frame, and I can see a chart pattern here. No, no, not head and shoulder. What is this? No. And the inverse head and shoulder has to go the same height from its breakout. That do you see the height? Now, as this guy broken out from the inverse head and shoulder, has it broken out? God bless you. It has broken out. It has retested itself. Do you see it now? From here, breakout, retest, and what? Do you get it now? Overall, this is what I'm seeing trade. This is what I'm seeing gold. This zone here is my what? Is my psychological zone. Exactly. Do you get it now? Because I told you how you create your zone now. And this psychological zone is going the same length of this what? So you see how we are able to picture thousands of pips ahead through analysis. We know that overall this market is still what? Going all the way up. All right. This was the sell we took on GBP. So what made me call this sell? Who can tell me? Eh? No, don't you can't call it an M pattern. Because before it formed, it did not show you this M pattern. Uh-huh. No, it was the sell that we took that was responsible for the breakout. Who can tell me?
What do you say? Say something.
Okay, what do you want to try?
What do you say?
Eh?
Yeah.
Uh-huh. No, it was that long bearish that was responsible for our sell. So what did I say for me to call it?
Was it this
A
one?
sell,
Did you
yes.
enter the market? How did you enter the market?
We entered the market from this point now. At this
From
point.
here. Then I'm saying you saw this one.
The breakout, you saw what?
I saw this place now.
Mm-mm.
This one.
What? No.
Stop at
Now, this is it.
Come on. Come on, let's try it now.
And it is actually on the, but you people can't be able to see it well, because it is still in the board. Yes. The answer is on the board, but the answer is on the board. I've already mapped it out, but you guys are not seeing it. Go. Yeah.
Because there's a downtrend here, and we have the price here. We have the price here. So you believe that they must see
You are still not getting it. Now you get them.
That guy gets it.
What?
That guy.
What is? Yes. So it is very surprising you guys are not even getting it.
I'm not using this. I'm stakeholder.
Double top there. Okay.
So the market give us higher low, higher high, higher low, then higher high, then give us lower
Change
low,
of market structure.
change of market structure.
God bless
But
you.
it did not break below this point, so it was not consolidating.
God bless you. Please clap for him. So it's not consolidating. So in which consolidation? God bless you. Now, you people are unable to see the triangle consolidation. It is there. This is because it was not obvious. Now let me increase the opacity. Are you seeing it now? Yeah. Yeah. God bless you. See, simple. From here, higher high, higher low, higher high. You are expecting a what? Higher low, but you now get a what? A break of markets, a change of character, closing below this previous one. It has changed the structure of your uptrend. Because if you take your trend line, where is my trend line by Iwolo? Where is the trend line? Ah. Trend line is there. Oh, okay. Now see, trend line from here, connect it to this point, up. See, can you see the breakout here? The breakout is not even this one. It's, here is the breakout. Here that break this guy to now give us a new what lower low. So we now have a what lower low, lower high, another what lower low. So now this was where we entered this trade because I saw this consolidation and market was coming down to this place and it break it, boom. And I call a sell between the price of what 1.35. Market was here, but I said that the sell zone is in between 1.35 to 1.353. So that is from here to here. Anywhere market is enter a sell, and market was still here. So and if you can say I said sell now. That was the first thing I said, sell now. So just enter a direct sell. That will start giving you the figures later. Do you get it now?
Triangle, what is the effect? I understand that
No,
this is
the triangle has broken to the low side now.
this is ranging.
The ranging, the consolidation has broken out.
Yes, so that means this normally what I have done is I have done the box here.
Not box, so you cannot draw a box now. You have to draw a triangle. A box is not the consolidation. A box will give you a consolidation of equal highs and equal lows. But yes, this one is giving you combination of what lower low and higher low. Do you still remember lower low and higher low? I give you types of triangles we have now. Ascending triangle, descending triangle. I send it to the group now. So this is a triangle consolidation. It has broken out below. I am expecting that this guy still does what? The final destination of this guy is where? Here. And where we have our what? TP3. But our TP1 was what? Here. Our TP2 was what? Here. Our TP1 was here because there could be a reaction here that could change, which actually what happened. Is that not so?
Why that?
Yes, TP2 is that it will come down. Now, from here to here, is that not so? Is your breakout point. Now, take your Fibonacci from this point to the highest point. Do you get it now? Now, market sold all the way down to come to your what? 0.764. This was why I called what TP2 because it's around the liquidity of this guy here. So I told you that any liquidity that is being taken out, boom, it is definitely coming to the next liquidity. Do you still remember at the beginning of our class? Oh, you forgotten? I might forget to. Now market came all the way down, boom. It did not take, but at the end of the day, this guy sweep out this liquidity. So once it sweep out this liquidity, I even close below it. It is definitely coming to this next one, which actually come. But it has not closed, but it's still definitely because the height of this triangle is still coming to this what? To this point. At this what? At this minor zone. That is it. Do you remember all this triangle that we did then now? Descending, expand the triangle, I've cleared the remaining ones. That's right. So this is this. So which triangle are we going to call this? No. What triangle are we going to? Symmetric. This symmetrical triangle. And the breakout happened where? To the downside. Be rest assured that this thing is still coming all the way down to this point. So why this is happening? Why this buy is happening is because of what? It is acting as a what? As a retest from this breakout. What will you do? Fibonacci from this point to the last point. From where? This is the starting point of this particular tree. Do you get? This was the starting point of this what? Of this breakout. Okay. Let's start again. From this place, right? If you take your Fibonacci from here, from this point to this point, it got into what? 50 and 61.8. giving us a sweet chart pattern again to tell you that this market will sell all the way down. And it got to this point. Is that not so? Take this off. Where is the delete? Take your Fibonacci again. From this point to this point. It come in between 50 to 61.8 again. And give us another was sweet pattern. Is that not so? Take it off. That one, it has done its work. From this point to this point. Do you see it now? It entered into what? 50 to 61.8 and it sold all the way down. Is that not so? This one has finished its work. Now, from this point, this is the starting point of that 50 to 61.8 of that previous one now. To the last point. Market is what? Currently retracing in between this 50 to 61.8. So what am I expecting? Now that this is telling me that the further sell will still come to this point at where at our minus 0.37. Do you see it now? So what am I expecting? I'm expecting a sell in between this guy and it come down to this point. Eh? At least it's still showing that it's coming what? Down. Downtrend. So that is in a downtrend, you see more what? Sellers than buyers. Which will still lead us back to the what? To the rule. Which will now lead us back to the what? To the rule I'm giving you guys. Now, which will lead us back to this rule. Where is it? Where is it? This one? Yeah. Which will lead us back to this rule. Hey, you know? Okay, yes. Now, this is the what? These are the three rules. Wave 4 can never cross in the same price of area of we understand. Which also implies that wave 4 cannot go below the starting point of what? Wave 3. In other words, wave 4 is what is expected not to what? Not to go below what? Not to go below the starting point. Below the starting point. Below the starting point of what? Of wave 3. Do we get it now? That my theory, yeah. But you sure don't get below the starting point of what? Wave 3. Now, these three rules are the what? Are the three cardinal guidelines that we what? That we help you identify a correct wave theory. Now, aside this theory, we now have another extra 4 that you need to know. This is the theory. No, we call it a cardinal. Cardinal means that most important. Most important. Now we now have other important ones too. Know this theory. Now I'm taking this off to give you the rest. Okay. Those other ones I will give you will explain why market used to extend out of a particular trend line. From what you discover that it's a sell and it broke below that trend line. So why is it that it is breaking below it to go? You understand from this wave theory. So once you are done, please let me know. Let us have break because I know what happened yesterday. Yes. So this cardinal rule means that they are what? They are unbreakable. You must definitely see it like that for you to get your wave theory. But the other ones that I want to give you now, they are what? They are breakable. They can be broken at times. It's just so not that they are not important. They are still important. Do you understand? Yes. But you see this one, it is cardinal. It's not so you can never do without it if you want to get your theory, your wave theory. Yes. You can never do without it. Ah, uh-huh. Mm? Yes. So can I move on now? Now, so what are the other important ones we need to take note? Boom. So I believe you are understanding this wave now. Uh-huh. So yesterday it was very chaotic. Well, thank God for thank God for clearance now. Uh, you said? Yeah, hope the mic is still working.
It's not okay. Pray about it.
All right. So now, other important rules. Other important rules to identify the wave structure. Now, I told you that these other important rules can be what? Can be broken. But that does not mean that they are less important. They are still important in you identifying a wave structure. Now, what are the rules? Number one of this guy, wave 5, wave 5 sometimes, comma, does not, wave 5 sometimes, comma, does not move beyond beyond the end beyond the end of wave 3. Full stop. This situation is called truncation. Do you know the meaning of truncation?
Yes. Okay.
Or the one we refer to as what? Failed, failed swing, or loss of momentum. Do we remember? As I said truncation now, people will be like, Ewotulele. But the truncation also means what? Failed swing. Failed swing that market is unable to what? Continue the what? The uptrend scenario. Are you following? Failed swing, loss of momentum. I beg, let me spell the moment. Okay. Okay. Uh-huh. Now, do you get it now? Yes. Is this understandable? Which implies that once you have wave one, boom, wave two, wave three, wave four, and where is the end of this wave three? This point. Is that not so? So when wave five begins, boom, sometimes it does not go beyond it. And when it does not go beyond it, what happens? Failed swing. Do you remember your market structure? Loss of momentum. That could now be responsible for your what? For your next correctional movement, A, B, C, before market now continues going up again. Do you get it now? We've not done correctional, the three wave pattern. We've not done that. After break, we will do that. But now we are still treating these guys first. So, do we understand? So, wave five sometimes, it's not every time, sometimes does not move beyond the end of wave three. This situation is called what? Truncation, failed swing, or loss of momentum, whatever the name is. Do you get it now? Yes, that is for what? Number one. Number two, number two, wave five, uh-huh, wave five sometimes, wave wave five sometimes goes beyond, goes beyond or breakthrough or what? Breakthrough the trend line, the trend line connecting wave five sometimes goes beyond or breakthrough the trend line connecting the end of wave three and five. I will explain this. Wave five sometimes goes beyond or breakthrough the trend line connecting the end of wave three and five. So what does that imply? It implies that look at this. It implies that if you have wave one, wave two, wave three, right, wave four, and you're about to have wave five. Now, the trend line that connects wave three and five sometimes can break beyond to extend before it now what retrace to give you ABC correction. We will do that in the second the second section of this. Do you get it now? So this is the trend line connecting wave 3 and wave 5. But sometimes your wave 5 can extend out. Sometimes it will come back inside. So yes, sometimes it could be a fake out. Sometimes it could just give you your A, B, C in within this place and continue going up. Do you get it now? Yeah. So that is why you do see most of the times that market trades outside the what? Outside the trend line. Yes, sometimes, not every time. So you draw an uptrend channel. Market is now giving you wave 3. Maybe wave 3 is supposed to end at that trend line you've drawn for it, but it did not yet, but it extended out. What happened? Because we know that from this rule, Elliot's wave theory has made us to understand that wave 5 can sometimes go beyond the what? Beyond the what? The trend line. But that does not mean that wave 3 cannot do that, because wave 3 is also a what? A motive, a motive what? A motive structure, or a motive wave. Do you get that now? But most of the times it's always on what? Wave 5. And if the structure change within an uptrend, what are you still having? Another uptrend. Market is still going up. It is when it's changed below, that it breaks it below, then you know that the structure has changed character to the downside. But you have uptrend, but another trend is forming, that is a fractal. Do you remember fractal? Responsible for the breakouts to the upside from an uptrend. What are you still now having again? Still an uptrend. So what will make you adjust the trend line is if market was reverse back inside, then you, but if it did not reverse back inside and it continues to go up, the particular trend that is responsible for that breakout will be your new what? Channel. Then you take this off. Do you get it now? So we will come back during the break to give you the rest. Yes, to give you the rest of the rules that we have.